MontesDeOca with live trading talk for November 17, 2011. We have some pretty strong metals markets here this morning. If you came in long and you have long futures positions, take some profits here, particularly for my Discord trading room traders. If you are long in the futures, take some profits off the table. We've completed daily targets. Hold on to your derivatives position long. But we've accomplished the daily targets on the daily signals and we have gone neutral. We have very, very strong derivative markets this morning. Gold mining shares up 1.78% on GDX. Also completing targets as we speak. I think one of the key elements or one of the key issues that we're dealing with right now is inflation, as the economy is showing tremendous resilience, tremendous demand, a lot more demand than anticipated in an economy that was expected to implode. And we're finding a tremendous shortage of materials, not only as a consequence of the anticipation of an implosion in the economy, or an implosion of demand, but basically a bottleneck, short squeeze supplies, manipulated market that is preventing supplies from coming into the market. But the latest news, it seems that about 1/3 of the ships that were docked in California have been pretty much distributed. About 1/3 of the supplies, basically. So we're getting a little bit of supplies into the economy, and it could be the fuel, you might say, that the economy needed during the holidays in order to go through this bottleneck squeeze supply, so to speak, in a more civilized way, as opposed to an extreme situation that can essentially put price inflation to levels that are unprecedented. So with that in mind, basically, hopefully this will bring some kind of normality into the economy and we can begin to see the real supply and demand balance that we have. For the time being, what I'm doing here is I'm basically trading the futures markets for short-term profits, but I am positioned in gold, silver, and in Bitcoin, anticipating much higher prices. We have about 3 issues that I believe the market is trying to resolve in here, and that is basically the monetary inflation that we're getting as a consequence of the dollar weakening, in reflection of this stimulus that continues to be at record levels. The M2 money supply is exploding exponentially, and they are continuing to demand more stimulus for the economy, increasing the debt ceiling close to $30 trillion. And it's pretty much feels like the bubble is getting bigger. And so in a situation like this, a couple of things obviously can happen is that the market forces can drive interest rates up in the US regardless of what the government does. If bond vigilantes feel that the US dollar is not basically at the level that it should be based upon the amount of stimulus that's been produced, we're going to get a tremendous adjustment in the US dollar, as we're getting in the price increases that we have seen in hard assets, real estate up 28-30% since last year. No coincidence, the dollar is down about 30% as a consequence of this stimulus. And so how long is it going to take for the economy to get back into some kind of normality where unemployment levels get normalized enough that the feds can begin to increase the tapering process? But I don't believe that high interest rates are at hand. And this is what the stock market is anticipating, and as well as the metals markets are finally beginning to feel that we are entering into a strong economy, strong demand, and therefore we could see an adjustment in the values of most things. So very, very bullish for precious metals, very bullish for digital currencies, for Bitcoin, and very bullish for the silver market as well. The thing that we want to focus on right now is the levels that we're getting to in terms of precious metals. And we are approaching the transference, you might say, or we are in the middle of making the change from a bearish price momentum as the market trades through the average price of $24.95. It's converting the bearish trend momentum into a neutral to bullish price momentum. And the silver market is basically here, basis the March contract, is turning the momentum, the price momentum, bullish with a target of 27.87. And this is within the cyclical trend that we're looking at right now for the annual cycle of 360 degrees. So we're getting a lot of confirmation here, guys, in metals that you definitely want to be long. But in terms of, again, the futures markets, we approach that as a day trade vehicle, but we are building a position, as I'm recommending my traders in my live trading room here, to build a position on derivatives in precious metals. We're looking at a chart, and I know it's a busy chart, but it's telling us a great deal of information. The gold market has completed the monthly targets of 1851, 1852. And in the same fashion that the daily signal, when it trades above it, it goes neutral. Or the weekly, when it trades above the sale 2, it goes neutral. The same methodology applies for the monthly. And so you're getting the monthly going neutral unless it comes down below 1852. So If you're maintaining an open position on stocks, derivatives, a close below 1852 would be your protective level at this point. This would indicate a monthly short trigger has been activated at the same time that it has negated, obviously, this uptrend. We seem to be breaking out of a major downtrend line, as you can see here. And we want to allow the open positions that we have to benefit by any potential breakout or follow through on the momentum that indicates 2003 as a target. Bitcoin, trading last at 59,645, has entered a weekly buy trigger along with a daily buy trigger, which you see on the left of the chart. And this is one of the most optimal signals that we can identify in Bitcoin, and it's given us a buy trigger. The buy 2 weekly level was 58,335. The low so far was 58,475 on the weekly. Below that, we have the daily 57,995 by 1 daily signal. So we reverted from a higher level than the daily and the weekly buy triggers. And this is where the buyers came in. This identifies the buyers coming in. And you can see here at 58,475, we saw tremendous value, and the price just rallied from that level pretty close to the targets above if you're trading short term. The way to interpret where we are right now in terms of the monthly signal is that it basically the daily signal, we're in a little bit of a bearish daily signal here, but we are within a weekly level of support between 61,255 and 58,335. What the reversion to the mean principle means, or mean reversion trading basically, is the adjustment in the momentum of price based on the fundamentals. And so we see in pretty much for the time being an artificial strong dollar that is being supported by the sentiment that interest rates are going to go up. And that's a false misconception in my book as I'm trading these markets, because interest rates, again, cannot go up on the face of all this tremendous debt. So the market is reacting basically to the dollar strength as we see a little bit of a weakness. But the algorithm, again, the way I use it is like a GPS. It's telling me that this correction here discounted whatever bullish news came in on the dollar, and now we've come to a weekly and a daily level that identifies the potential reversion to the mean to unfold, or this is where we have the highest mathematical probabilities that we're going to see a reversion from here. And we're looking at a weekly level of support as well as a daily level of support. So 58,335 was a weekly average, and we are entering into what the AI calls accumulation of supply. You want to accumulate supply, and this is what these blue lines basically mean. The green line simply means the average price daily. And so if we get above 61,255, we're going to be kicking in a weekly buy trigger as well as a daily price momentum, bullish price momentum. That's a pretty strong combination. So the market looks like it's completing this swing correction, and I'm waiting for a close above 61,255 to add to my position here. And this is what I would recommend if you're trading in Bitcoin. The daily target of 1871 was almost completed with a high of 1876. For all intents and purposes, it completed the pattern. And this is what I advise to those that are following this, that use a 10% margin of error. This is what I tell my traders in my trading room. Silver 2131 was the sell one for today. And in the case of silver, we pretty much have activated a daily and a bullish price momentum, and we took some profits up here close to this level early this morning and recommended our traders to do the same. So in terms of the futures, we are neutral. We are flat. We have no position. We're waiting for a signal. We are holding on in terms of the derivatives in the market to our long-term position in gold mining shares. As it looks like the market potentially could be in a major breakout. The one thing that I would like to see is these gaps that we see here to be filled before the rally unfolds, the major rally unfolds, and I think is beginning to build. We have a couple of more legs on the upside, but the market is into a what it's called basically a resistance level. So while we are holding on to our position long term, we are flat in the futures markets. If you would like to join us in my live trading room, please let me know. Send me a notice, send me a little note, and we'll be more than glad to have you come in and watch the rest of the day trading live in the live trading room. The trading room, the trading floor is open 23 hours a day. So shoot me a note, and I will be more than glad to send you an invitation for you to see how we trade live and how we applied live the variable changing price momentum indicator. Things have gotten quiet a little bit here. Derivatives in metals are holding their gains. And we're comfortable where we are in terms of the futures markets. As you can see, the RSI pretty much is also indicating an overbought condition. So we want to let the market relieve some of this upside pressure, maintain our long position long term, and use any short-term corrections to take advantage of the liquidity of the market and potentially, obviously, continue to buy the long-term strategy. I think we have one more swing correction down, and ideally I would love to see the market into the blue levels at whatever price level that is. When those blue levels come into place, that is when I would load up the truck, so to speak. Continue to maintain your long-term position. Continue to maintain your long-term position here, and add on any corrections given the opportunity. I think we're going much higher, and I believe that we are on the way. Thank you again for the opportunity to share this with you, my friends, and I look forward to talking to you again real soon. Be well. Take care.